Happy Friday. You're watching Businessworld Live. I'm Danie Laurel. It's the start of the last trading day of October. Let's kick off with our top story. Socioeconomic Planning Secretary Karl Chua says the country's economy is showing strong potential for growth in the third quarter. That's as looser restrictions have allowed more employees to return to work. However, he cautions that in the long term, the pandemic may cost the economy trillions in pesos. Mobile journalist Pamela Vasquez has the rest of the story.
How much will the COVID-19 pandemic cost us in the long run? Economic Secretary Karl Chua has crunched the numbers, and it's not looking pretty.
The long-run total costs of COVID-19 and the quarantines to present and future total costs of 41.4 trillion in net present value terms.
That's based on the idea that consumption and investment will be lower over the next decade, given social distancing measures. Chua also shot down the proposal for more cash aid through Bayanihan 3.
If you give a stimulus, then there should be a way for the people to spend it. But if you lock down the economy continuously in various levels, then there would be little opportunity for that stimulus to be used.
The Health Department has said NCR may be downgraded from Alert Level 3 to 2 soon, given the decline in daily cases.
So by moving from Alert Level 3 to Alert Level 2, we can improve upon our GDP by 10.3 billion per week and reduce the number of unemployed by around 43,000 per week.
Chua says the economy can recover to pre-pandemic levels by the end of 2022, but other economists aren't convinced.
The Philippines suffered one of the worst economic contractions in 2020, and government forecasts it will take at least a decade to recover from the deep economic scarring due to its poor pandemic management.
Mobile journalist Pamela Vasquez, We Are One News.
Now, more short-term foreign investments left the Philippines in September. That's as investors remained wary amid the Delta surge. Hot money posted a net outflow of $24 million in September. That's 95% lower than the net outflow a year earlier, but is a reversal from the almost $12 million net inflow seen in August. It was also the smallest net outflow recorded since March of 2015. For the 9-month period to September, hot money yielded a net outflow of $459 million, 89% lower than the net outflow logged in the same period in 2020. Meanwhile, the government plans to borrow 200 billion pesos from the domestic market in November as it takes advantage of the excess market liquidity. The Treasury Bureau said it would borrow 60 billion pesos in Treasury bills and 140 billion pesos in Treasury bonds next month. The November borrowing plan is the same as the October program, which in turn was smaller than the 250 billion peso borrowing plan in September. Tech stocks were in focus overnight in Wall Street. You can see on my terminal here how the Nasdaq performed. You've got Apple and Amazon falling in extended trading. That signaled more than $200 billion of a combined market value drop when the U.S. market reopens later on today. And this overshadowed all of the upbeat issues that we had over the company's performance in Wall Street. There was again a record close. You can see the Nasdaq up by 1.4%. Now let's move over to Asia Pacific. You can see on my terminal here the China debt crisis remains in focus. Some holders of the Evergrande bond received a little bit of an overdue interest payment, so there's more time there for the property developer, but quite a sea of red this morning. The Nikkei 225 down by more than 1%, and you can see the rest of the closing in Asia. We're still awaiting for how those will be opening, but it does seem to be rather bleak. You've also got the growth story over in the US slowing more than expected in the third quarter, and that might have had an impact as well on our reopening here in Asia. And you've also got a surge in COVID-19 cases, but still separately, you've got a report showing that the weekly jobless claims had actually fallen to a pandemic low. And one thing in focus, of course, is Facebook, or should I say Meta. They have changed their name. You can see on my terminal here the description of Facebook now contains Meta Platforms Inc. As of last trade, it's trading at $316.92. It's up by 1.5%. More on that later on in the show. Let's take a look at our own domestic open here. You can see our index trading at 71. Yes, that is a bit of a bump up from yesterday. Let's take a look at the big movers of the day. You can see Metro Pacific leading the charge here, up by 1.9%. Another one, which is of course a conglomerate, AEV, joining Metro Pac in leading the charge. But you've got the worst performer this morning is actually Converge, which has been the best performer year to date. So that is down by 1.9, or close to 2%. And speaking of Converge, I did want to check in on that stock specifically because their CEO had just mentioned that they are looking at, at least he is dreaming to build a tech city in Pampanga over the next 3 to 4 years. Of course, that's the hometown of Dennis Anthony Uy. He wants to give back to his hometown because he is from Pampanga. Nevertheless, the stock here losing 65 centavos in the first 12 minutes of trade. And finally, just a quick peek on Meralco. This, as their unit, Power Gen, has said that they will be spending 6 billion pesos in solar projects. There will be 4 solar farm developments this year until next year. That's according to MGen's president and CEO Jaime Azurin. Right now, there's construction work going on for 78 megawatt alternating current plants. That's in Rizal. They've also got, of course, negotiations in progress for other EPCs in Isabela, Nueva Ecija, and Ilocos Norte. They're going to be spending 3 billion pesos for capex this year and another 2 to 3 billion pesos next year. Now, here to chat with us as we end the month of October and, of course, take a long weekend breather, we have with us Edser, Trinidad, FVP and Head of Investment and Research at First Metro Asset. Good morning, Sir Ed, and welcome back.
Yeah, good morning. Thanks for having me again.
Sir Ed, let's just take a step back at the month of, not just the month of October, but the year to date. We've ended 10 months of 2021 that just zoomed by so fast. We've got 2 months to go. But now, we seem to be at least reaching the highs year to date. What is causing this? And does this rally have legs as we move towards the end of the year?
I think the bottom line here for such a strong recovery is the decline in COVID cases. Um, yes, on a year-to-date basis, we lag relative to our neighbors, primarily because of some surge in terms of number of infections, and that has resulted into lockdowns, and which in effect has prevented us from opening the economy further, and this has basically have a negative effect on the market as a whole. Now, as we've seen, starting to see COVID cases declining, and we've already lowered the alert level from number 4 to alert level 3, and with the continuing decline in cases, um, um, in terms of sentiment, there has been a significant improvement in sentiment, and this has resulted to a recovery in our market.
Okay. Sir, do we still care about counting the COVID cases? The rest of the world does not seem to be looking at that anymore. You've
Yes.
had resurgence, but they're still opening the economy already. Can you still link the performance of the market to our cases, to the lockdowns, or are we past that already and just moving forward with looking at the next 12 months?
I think with the increasing number of vaccination among our population, the number of cases seems to, in terms of importance, moving forward, it should be lesser as more people are being vaccinated. So hopefully, the level of severity of infection will not be as severe as compared to what we have seen before. So therefore, because of lower severity of infection, so our hospital utilization rate should also decline, and that should allow us to better manage our healthcare facility. I think that's basically what's in store for us. I think the outlook right now is how will the recovery, how the pace of our recovery. I think a lot of the strong recovery we've seen the past 6 months is basically due to expectations. How will the company or how will the economy recover? And as you see right now, during the early part of this year, more of the recovery, more of the stocks that have been performing well are those companies that have been able to be resilient um, in facing this situation. Now, the second leg is on the recovery of place or cyclical stocks, such as banks, property, and which have started to become a focus right now um, uh,
Okay.
for,
So
for the market.
okay, so let's talk about some of these focus sectors and what you call cyclical stocks. One has in focus has been the mining industry. Of course, you know you've got the not just the issues on the bans on the open pit mining, whether that will be lifted or not, but really just commodity prices surging, energy prices soaring. Is this something that is just a knee jerk reaction to the reopening of the economy? We might be needing more energy, China, importing more commodities, or is this going to be, like you mentioned, something that is cyclical that might be the next, sector to be rallying?
Well, so far, I think the recovery in terms of the commodity is should is looking at is looking to be sustainable. First of all, as the world economy reopens, definitely you see an increase in demand for these materials. So far, we've seen in terms of the basic commodities, in terms of the prices have moved up by high double digit, and with the impending winter season, definitely China, countries such as China and the Western markets or Western economies will be piling up for this type of fuel in order to you know to prepare them for the winter season. So definitely, as we are being are exporters of coal, nickel, definitely these companies should benefit from an increase in prices.
Okay, so there's actually room to run here. You're saying it's a fundamental shift. It's not just an exciting moment for them. Sir, what about the banking sector? This has not performed, very well if you look at the amount of like loan growth, and if you look at the provisions that they're putting aside. Can you say that those provisions set aside already, even just at the beginning of the pandemic, will already last them through for all the pain ahead? Or is there going to be more pain to be seen in the banking sector? And if so, how are these reflected in the market prices?
I think the worst is over for the banks. The banks have been fully provided, and considering that the economy is starting to get back on its feet, so therefore you have to expect that loan provisioning or loans that are not turning sour should also decline, and therefore their loan provisioning moving forward should also um, be reduced. So that should entail better income for the banks. In addition, there are expectations that because of the high inflation, there should be an increase in their terms of the policy rate. So ev- historically, every time there's an increase in policy rate, banks benefit from it in regards to expanding their NIMs. But at the moment, I think as the major driver for growth right now for banks is
Mhm.
as the economy reopens, so people or businesses will start or will need working capital, and that should also lead to improvement in loan growth.
Okay. And finally, sir, before we let you go, year-end outlook for the index now that we have 2 months left. We've
Mhm.
gotten third quarter earnings, but the bulk of it will be in the next couple of weeks. Will we be breaking above the 7,300 levels as we end the year?
Again, there are a lot of possibilities. Uh, I think during the beginning of the year, during my early interviews with you, our year outlook is for the index to hit between 7.1 to 7.5, and now it has already reached more than 7.1. I believe that I do not discount the possibility that it go beyond 7.3. It all depends on the corporate earnings that the companies will be releasing, especially for third quarter. And so far, the numbers that have been released are encouraging. Second, as we going to further lower their level, that means an increase in capacity in terms of transportation, restaurant capacity, and that should further fuel the economic growth. And that should also fuel and improve market sentiment towards the Philippines.
Okay, so still some room to run there. Hopefully above 7,300 should the earnings continue to surprise on the upside. Thank you so much, Edser Trinidad of First Metro Asset.
Thank you.
Checking in on other headlines, this from the Philippine Star. Oxford Economics says the Philippine economy would be among those to be hurt the most by the slowdown in China. In its latest research, the global think tank said Beijing's growth slowdown would dampen economic activity across Asia Pacific in various degrees, depending on trade linkages with the second largest economy. Now, after bouncing back from the pandemic last year ahead of everyone else, China is experiencing a slowdown amid a power crunch and weak real estate and consumption. This puts the Philippines and Thailand as the most affected among the largest trading partners of China in the region. Oxford used five indicators as the basis for its study. These include exports from China, manufacturing and fixed asset investment, infrastructure FAI, real estate FAI, and retail sales. The metaverse is here. Facebook, the company, will be known as Meta moving forward. The new name is said to reflect co founder and CEO Mark Zuckerberg's focus on creating a new reality based on immersive virtual experiences. But for now, the rebrand will mostly be a name change. After all, delivering the many technologies needed for Zuckerberg's vision of a metaverse will take decades. The word meta suggests a layer of abstraction between the company and its product, which will still be called Facebook. It is comparable to the rebrand of Altria, the owner of Marlboro Cigarettes. The company changed its name from Philip Morris in 2003 in part to get away from its association with cigarettes. But to this day, Altria still gets most of its revenue and profit from smokes. And that's the first look into the business day. Today is Friday, October 29, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are What News.